You know what's crazy? The richest guy in the world can pay a lower tax rate than your Starbucks barista. Not illegally, not hiding money in some island somewhere. Legally, in broad daylight. And once you see how it works, you're going to be mad. For real. So here's the thing. In 2021, ProPublica got their hands on actual IRS tax data, leaked, confidential, the real stuff, on thousands of the wealthiest people in America, Warren Buffett, Jeff Bezos, Elon Musk, and what they found was wild. Between 2014 and 2018, the 25 richest Americans saw their combined wealth grow by $401 billion. You'd think they paid taxes on a chunk of that, right? Nope. Their real tax rate, what they actually paid compared to how much richer they got, was 3.4%. Buffett's personal rate during that stretch? 0.1%. That's basically a dime for every $100 he made. Bezos paid zero federal income tax in 2007 and again in 2011. Zero, while he was already worth billions. And look, before you say, okay, but maybe they just don't have income, that's actually the whole trick. That's the loophole. Stick with me. Here's how a normal person builds wealth. You work, you get paid, that paycheck gets taxed, then maybe you invest what's left, and if that investment grows and you sell it, you get taxed again. Every step, Uncle Sam's got his hand out. That's just life for like 99% of us. But the ultra-rich figured out a totally different playbook. Financial folks literally call it buy, borrow, die. Sounds like a horror movie title, I know, but stay with me because this is the part that's going to make your blood boil a little bit. Step 1. Buy. They buy assets that go up in value. Stock, real estate, a piece of their own company. Doesn't matter. Something that appreciates. Step 2, and this is the genius, evil genius part, they don't sell it. Selling triggers capital gains tax. Instead, they borrow against it. They walk into a bank, or more specifically their private wealth manager, and say, hey, I've got $500 million in stock sitting right here. Give me a loan against it. And because that stock's not going anywhere, banks hand out these loans at crazy low interest rates. It's basically the safest collateral on earth. Now here's the part that should make you sit up. The IRS does not count borrowed money as income because a loan comes with an obligation to pay it back, even if you never actually sell assets to pay it off in your lifetime. Think about that for a second. If your boss gives you a $50,000 bonus, that's income, that's taxed. But if a bank gives a billionaire a $50 million loan against his stock portfolio, zero tax, not a dime. He can use that cash to buy a house, a yacht, whatever, completely tax-free spending money, and technically he's not even making anything on paper. He's just borrowing his own wealth back to himself. So now you're probably thinking, okay, but a loan's gotta get paid back eventually, right? That's the catch. That's where they get you back. And you're right to think that. But here's the kicker, the third step, the one nobody tells you about until it's too late to be surprised by it. Step 3 is die. I'm not being dark, I'm being literal. When these folks pass away, something called a stepped-up basis kicks in. It's written right into the tax code, section 1014 if you want to look it up yourself. What that means is the moment they die, all those stocks and assets get their value reset to whatever they're worth on that day. Every single dollar of gain that built up over their entire lifetime, gone, erased, like it never happened tax-wise. Their kids inherit the stock at the new current value, and if the estate wants to pay off those old loans, they can sell some of that inherited stock and owe basically nothing in capital gains because the gain was just wiped clean. So walk through that with me one more time, because it's honestly kind of stunning when it clicks. You buy an asset, it goes up in value. You never sell it, so you never trigger a tax. You borrow against it to live large, tax-free, because loans aren't income. And when you die, the debt gets settled and the gains just evaporate for tax purposes. Buy, borrow, die. 3 steps, and a fortune passes down basically untouched by the IRS. Now here's who the real villain in this story is, and it's not even really the billionaires, it's the system itself. The tax code was written by people who had every incentive to leave this door wide open, and it stayed open for decades, because closing it means going after some of the most powerful, well-lawyered people on the planet. Elon Musk reportedly paid around $68,000 in federal income tax back in 2015. $68,000, while his net worth was already in the billions. Meanwhile, you and I, if we get a raise, the IRS is taking a bigger cut before the money even hits our bank account. And this isn't some dead issue from a few years back either. It's happening right now. California Governor Gavin Newsom recently called this exact strategy out, calling it a tax-free lifestyle loan and pushing Congress to shut it down. Senator Ron Wyden's been trying for years with something called the Billionaires income tax, which would tax unrealized gains for the ultra-wealthy and kill the stepped-up basis loophole entirely. Every single one of those bills has failed, every one, because, and I want you to actually sit with this, the people who'd have to vote to close this loophole are often the same people who benefit from it or who get massive campaign donations from those who do. Now look, I gotta be straight with you on something because I don't want you walking away thinking this is the entire story. Some tax researchers, including folks at the Tax Policy Center, have actually pushed back a little, saying most wealthy households aren't doing the full never sell, borrow forever thing. A lot of them are still saving and eventually selling. But even they admit, Elon's 3.7% true tax rate, that's real, it happened, it's documented. This loophole exists, it's legal, and it's being used at the absolute highest levels of wealth in this country. That part isn't disputed by anybody. So what do you actually do with this information? You're probably not sitting on a stock portfolio worth $500 million. I get it, neither am I. But here's why this matters to you anyway. Every dollar these loopholes let billionaires avoid paying is a dollar that has to get made up somewhere else. And guess who that somewhere else usually is? Regular working people, wage earners, you. The wealthiest people in this country aren't breaking rules. They're just playing a game most of us don't even know exists, with rules written specifically so they'd win. And if you think this loophole is wild, trust me, it's just the tip of the iceberg. The tax code is full of rules like this that are quietly working against everyday Americans. My goal on this channel is to break them all down so you actually know how the game is played. So if this video made you see things a little differently, hit that like button. It really helps get this information out to more people who need to hear it. Subscribe to Tax Guy Explains so you don't miss the next breakdown, and share this with a friend or family member who still thinks the system is working the same for everyone. Drop a comment below and tell me, should Washington close the buy, borrow, die loophole, or is it just smart financial planning? I'll be down in the comments checking out what you think. Thanks for watching, and I'll see you in the next one.